Yo, what's up, fam? Today, we're diving into some juicy dividend stocks that just hiked up their payouts. You know the deal, dividend increases are the secret sauce for that sweet dividend snowball effect. Your yearly dividend income can shoot up just because your stocks decide to be a bit more generous. So, let's not waste any time and get right into it. First up, we've got Caterpillar. They just boosted their dividend by a solid 8.5%, and they're also ramping up their share repurchase program to $21.8 billion. Share buybacks done right are a win-win for us. Fewer shares mean higher earnings per share, and that's always a good look. Caterpillar is currently trading at around $330.98 per share and has climbed 33% over the past year. Their dividend yield is sitting at 1.71%, but if you got in early, your yield on cost could be around 3.13%. The free cash flow covers their dividends easily, with a payout ratio of just 26%. Moving on, we've got Target. Unfortunately, their dividend hike was only 2%, which is below inflation, not ideal. Over the past year, Target's stock is up about 8%, but their recent dividend increase doesn't excite me much. Their free cash flow has been all over the place, with a rough patch in 2020, but bouncing back a bit in 2023. Next on the list is Williams-Sonoma. Their dividend increase was a tiny 1%, but their stock price has soared 118% over the past year. Short interest is high, which is a bit of a red flag. Still, their free cash flow has exploded since 2020, and their payout ratio is impressively low, leaving room for future growth. Darden Restaurants is up next. They just raised their dividend by 6.9%. They own brands like Longhorn Steakhouse, Olive Garden, and Ruth's Chris Steakhouse. Their stock is down 11.4% over the past year, but has seen solid growth over the past decade. Their payout ratios are in a healthy range, with free cash flow covering dividends comfortably. General Mills gave us a small 1.7% dividend hike, which again, is below inflation. Their stock is down 18% over the past year. Free cash flow and dividend growth have been pretty stagnant, and their payout ratio has climbed to around 61%. On a brighter note, Kroger announced a 10.3% dividend increase. They've been steadily growing their revenue and free cash flow, with healthy payout ratios. Over the past decade, they've bought back over 25% of their shares, boosting per-share metrics. Lastly, we have a bunch of financial sector stocks that made moves. Jefferies Financial Group hiked their dividend by a massive 16.7%. Morgan Stanley bumped theirs by 8.8% and renewed a $20 billion share buyback program. Bank of America increased their dividend by 8%. Citigroup went up by 5.7%. Goldman Sachs boosted theirs by 9%. And U.S. Bancorp increased theirs by a measly 2%. There you have it, to 13 dividend stocks that recently upped their game. Drop your thoughts in the comments. And alright, fam, that wraps up our rundown of 13 dividend stocks that just hiked their payouts. If you found this video valuable, don't forget to smash that like button. It really helps out the channel. Also, subscribe and hit the notification bell so you never miss an update on the latest financial news and stock insights. I want to hear from you. Which of these dividend stocks are you most excited about? Drop a comment below and let me know your thoughts or any other stocks you think we should keep an eye on. Thanks for watching, and until next time, keep hustling and investing wisely. Peace out.